Hello folks, I'm Ellie Little and this is your weekly TA Wrap, where we take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened last week. What does it tell us about the coming one? I do this show every Sunday night live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. As most of you know, I do a show daily, Monday through Thursday. And there we try to look at, a little bit more of a micro view than we do here. Here is a bit more macro in that we're trying to look at what happened on a weekly basis, not so much inside. I'm going to start with the weekly on the GSPC, which is the S&P 500. And if you look at it from this perspective, last week we had a push-up, right? Nice push-up, got up towards the highs. We're pressing up towards the highs, but really just couldn't get over them. If we look at the daily over here, you can see that we actually failed up there with some volume expansion right at the highs. Now the S&P actually got to new highs, 1883.97 on Friday, which eclipsed this 1883.57 by 40 cents. So that means you made new highs, you made it with volume, right? But you couldn't hold them. So you basically failed on price, but not volume. A lot of times that means you're simply going to go back up there and test it again. The thing I would note here is that if you're the classical kind of TA folks, you're seeing what looks to be some sort of a head and shoulders potential formation taking place here, with that being a left and a right shoulder, right? You kind of got the neckline down in this area. If this thing were to pull back, and when we looked at the daily there, we saw a failure at the highs, and we're going to see more of that as we look at elsewhere, then you might see some sort of a pullback, right, and then punch back up here and set up a right shoulder. So a lot of times at the end of a large move, you get these kind of head and shoulders things that take place, and then people start looking for larger ones that are potentially going to take place, and you can kind of see how that larger one could also eventually play out. But that's all projections. That's all wondering what might happen, just simply looking at the charts and looking at patterns. If you look at this on a weekly basis, it really doesn't look like anything's wrong with it. It looks like it's doing just fine. Elsewhere, though, it's starting to look a little bit more troublesome. Again, if we look at the weekly, it doesn't look bad, right? You push up there, you're hanging at the highs, 5 weeks at the highs. You can't really fault that. It's only when you push over and start looking at the daily that you can see the kind of damage that's being done. And that's really why you look at multiple time frames, because you're trying to see, what happens on the daily and how that affects the weekly, right? Because, we've talked about this before, but I'll repeat it one more time, right? If you look at the short-term time frame, that's going to drive your intermediate term time frame, right? Potentially, right? Certainly this has to do something in order for this to do something, and then that eventually drives the long-term time frame. So you're always looking back here as to what might be coming, right, that could affect the intermediate and eventually affect maybe your long-term time frame. And so when you look at the short-term time frame, right, you can see some damage, and it's a pretty good damage. I mean, you had a nice big, there's 3 big bars here on the way down. There's this one, and now that one. On this one, you had volume expansion. Here you had it again, right? Now you got big volume expansion. It fells at a resistance zone, right? Crashes right back down, and it's already down here threatening the swing point low again. If it doesn't get to this low, let's say it just kind of hangs around here tomorrow and doesn't get to this low, that also is going to become a swing point low. Now, in this particular case, it's already broken this one, so on this time frame, it doesn't mean that much. You'd have to come down here to break multiple swing point lows. But you can see how this market is really struggling, and it's struggling in the sense that you're getting a lot of selling coming into the tech, the NDX. The ones that's strongest inside here continue to be the semiconductors, right? These guys just keep trying to power ahead. But if you go look at other things that are big drivers in here, which is Apple, can't go anywhere. It's in a range trade at best. Google, same sort of thing. It's in a range trade, right? If you go over to Microsoft, Also, it was in a range trade. Now, it has pushed higher, but two of the three big ones haven't been able to move. Now, Microsoft, let's pull this up, put it over here on a weekly, and you can see the breakout there as well on suspect volume. So Microsoft getting some juice, the other guys can't. It's kind of holding this guy back, even with the semiconductor stretching to the upside. What's really starting to happen is a lot of rotation, right? A lot of rotation. Some of the money coming out of here. Last week you saw a huge rotation out of the IBB. These guys got smacked. If you put them on a daily chart, you can see the kind of huge damage that was done here. Big volume expansion on the downside. Multiple swing points down here. It's coming after now. So we've got some damage going on in the tech sector. If I pop back over to the broader Nasdaq, you got the same sort of thing going on with the Nasdaq. You know, you got the hanging at the highs kind of stuff, and then you go inside of it and you see the more damage that's taking place. So, you know, it's not as if this has to crash lower. It's just that if this thing hangs on for another day, you're going to get multiple swing point lows, and usually a break of multiple swing point lows gives you 2 to 3 bars extension to the downside. That would kind of be this area if this thing doesn't break on tomorrow. It may just come down and break on tomorrow and, you know, never set up the larger potential, a faster move down that kind of happens on that. But still, even when we're talking about that, if you go back to the weekly, folks, this doesn't look bad. I mean, you got to get way down here before things get bad. And so on an intermediate term time frame, this market still looks fine. Short term, yeah, more congestion, more consolidation, more of the same stuff that we've seen for some period of time now. And they're really just range trades so far, right? There's a range here still taking place. There was the larger range to start with that was down here. Inside that you can draw another one, right? You can get kind of 3 equidistant ones. You got one here, another one there, and another one down here. So you can kind of see, okay, if they break down here, then they start trying to get down to the next level. So if you break down and you don't come immediately back into a higher range, then you're going to play in this range, which means top to bottom kind of stuff. And you can see how that could play out. So they're all pretty much the same. I don't really need to go over the rest of them. The Russell, IXIC, NDX, they're all about the same. They all came down, volume off the top. The Dow Jones actually, I guess we should probably look at it. It never even made a new high. Here's the daily, couldn't make a new high, comes off the top. And if we look at it over here on the weekly, same sort of thing. It never got to the top. So, you know, I talked about and suggested that, you know, a few weeks back that maybe this would be the one that gets up there and tests the top, and then we see the pullback. Well, it never quite got there. Maybe it still will. But, you know, the Dow is really the laggard. It's having a hard time. And a lot of that is just plain economics, right? So if you really think about what's going on last week on a fundamental standpoint, you had the Fed decision. Of course, they kept rates the same. They did their 10 billion taper that they've been doing. They're still pushing, I don't even know what the number is now, but I think it's 50 billion they're pushing in on a monthly basis, which is not small change. So that money's still coming in there, but it's, you know, they're slowly taking it away. You got issues in China. You know, China's got their property bubbles. They've got their debt issues. You know, they've grown their debt like crazy the last 4 or 5 years. And so China has to try to slow down, and trying to do that with a world market where the exports are not rising as they used to for China, it's a tough deal. It's a tough job to manage that. Of course, they are centralized planning. You know, they speak, the market listens, so to speak. And so, and not the market, but, you know, the banks, if they say we're going to do this, you know, that's what's going to happen. That or you get thrown in jail, so you pretty much do what you're told. And, you know, from that perspective, you know, in my opinion, you know, when you have, you know, they used to say back when I was in political philosophy that the best philosophical system was a benign dictatorship, right? Because you can make things happen, you can make them happen now, and if it's benign and it's good for the people, it's the best, right? It's the most efficient system out there. It's just that a lot of times they're not benign, and you know, right now China certainly has a dictatorship, even though it's spread across, you know, a number of members, it truly is just a Politburo, right? I mean, they do what they want to do, and they try to guide the country along the lines that they think is proper for themselves and for the country. And so it's a more efficient system in terms of making things happen. The problem with that a lot of times, though, is that there's a lot of inefficiencies inside of it in terms of malinvestment. So China has its issues. Every country you look at has its own set of issues. I mean, if I talk about China with issues slowing down and stuff, look at Australia. Australia is so dependent on China in that they're a huge mining resource country pushing product to China to build stuff. And as China continues to slow down in terms of what they buy, that affects them. And it's always ripple effects everywhere, and so everybody kind of has issues, and so much of that, or actually most of that, is all tied to debt. So many years the world as a whole lived on excessive debt, and that debt, it's hard to pay back. And the way they're trying to do it, and the way even China's doing it now, if you look at the renminbi, is they're devaluing their currency, which is what everybody else is doing. And that's why you don't see any currencies crashing, yet you continue to see inflation pushed into the system as everybody tries to devalue what they have. Because they've got to devalue it to eat up the debt. There's really no other way around it. Other geopolitical, Russia still, they're digging into Crimea. They got all the troops along the border of the Ukraine. That probably nothing happens until mid-May when the elections happen in Ukraine. But they're definitely sending a signal to the Ukrainian people that if you don't elect someone who's somewhat pro-Russia, we just might come in there and take something else. So that's going to continue to be a hot spot. It's on the back burner right now, but it will come back. Turkey shoots down a Syrian plane. I'm sure that has something to do with the fact that they need the external pressure to try to quote-unquote rally the troops at home. They just banned Twitter because they want to save their democracy, is the way I read the headline today. A lot of issues in Turkey. Turkey, that government is going down. Just like so many of them we've seen, it's going to be the same thing there. It's going to add even more turmoil to that region of the world. I don't know that it really affects us greatly, other than the fact that it increases pressure in that region in Europe. I mean, Europe's got Ukraine, now they get Turkey on the southern flank, all kinds of issues. So, outside of the U.S., things don't look so great. I mean, there's so many issues out there, and they've been out there, and that's why everybody disbelieves this market. But what does the market do? It just keeps grinding up. I mean, it doesn't matter what I look at. They all keep grinding up. At some point, this will change, but for now, it's still the same thing. So we'll see if we can get a flip around and move back up Alpha Friday's big reversal back to the downside. But I think it's going to be hard. I think there's going to be some difficulty in actually doing that. Let's see here. Economic data is about subpar. I hadn't really seen anything change there. It's about the same. A lot of it's still blamed on the weather. You got earnings season starting up here in a couple of weeks. So there's a lot happening always in the markets that can affect the markets. And right now, these markets continue to hang at the highs, waiting for something that will push them higher. Yeah, we're at another crossroads. Yes, that part of it's the same, but outside of that, doesn't look bad. Let's go over and look at some of the other markets that are of interest. I'm going to stay here on the weekly time frame, and let's start with the dollar. Dollar had a nice big push up last week off the Fed news as the Fed continues to tighten. The dollar had tested down here at the lows, so they broke, and then they're right back up inside that lower range. They didn't have the volume on the break. It was suspect. So you're doing a retest regen off this high, 2150, and you get right to it, 2147. So if I draw this in, this will definitely be one thing to watch this week, which is the dollar. Can the dollar get back above this swing point low that it broke? If it gets back up in here and holds, then it's not going to quote-unquote regenerate lower. If you take and look at your ABCD structure, that pretty much is already played out. It did what it was supposed to. It finished out, flipped around, back up. looks to me like the dollar is going to continue to trade in this lower range for a while, but doesn't want to break yet. And without the dollar breaking hard, that's going to probably continue to put some pressure on the metals. So if we go back over and we pull up gold and look at it on a weekly basis, gold was selling off pretty good last week. So it had just made a high, but it was coming into huge volume, right? It couldn't stay up there. One bar later, it's back down the other way. I expect gold's going to try to make it back into top of this low. 124.70, it's at 128.47. So another 37 bucks or so deeper retrace. That kind of looks that is what it looks like. If we go in here on a daily, you can see an ABCD type structure starting to take place here potentially. Take it down to that level, bring it back to the swing point high. That would be a retest regen off that high. Volume expands here, volume expands again there. You can see it. Up until then, volume flows were good. So finally, they're kind of pulling the plug and pulling out of gold. And I expect that with that scenario I just described in the dollar, it's going to continue to put pressure on this market. If I go over and look at the bonds, now the bonds have been trying to press the other way. Now they haven't been able to really get up there and do anything with it. They've been trading sideways in a range here for a while. So you kind of had this range going on. Underneath it's another one. But they won't break into the lower one, at least not yet. They've held every time down here they've tried. And they keep trying to test this high and get through it. Okay, what are they trying to get through? They're trying to get through all this supply over here. That supply, once it disappears, you're going to see a fast move back up to do a retest regen up in this area. If that is true, we should see some pressure on the markets. Why would that be the case? Well, because I can't see why these markets would see rates go down, right, and a push higher into this region, other than the fact that it's a fear trade. I can't see another reason for it to happen. So the only way I could see bonds making that move is on a fear trade, and that would mean that the market is selling off and money's moving into bonds, which is exactly what we saw happen on Friday. Bonds were struggling all day. Once this market, they were hanging there. They weren't doing anything. Once the market started to sell off, they started to move up. What else we got here? I haven't looked at junk bonds in a while. Let's see what the junk bonds look like. Yeah, they get up to the top, resistance, pulled back. Nothing special there. Continuous commodity index is finally starting to pull back. Really no volume coming back though, so that's probably going to set up a nice buy in this area if in fact it gets that low. That would be the nice area for it. We look on a shorter term basis with the bonds. I'm going to go to the 7 to 10 year one. Yeah, and that one looks almost the same. The long bonds, interestingly enough, are the ones that look the best. Let's pop over to the world markets and see what's happening there. And honestly, there's not much. I did glance at some of these. I don't see much happening. Germany still hanging in the trading range, and almost all these have trading ranges going on. So there's kind of a dual trading range here, like we see in so many cases, right? Equidistance here and there, and it's just holding there. So Germany's coming back up to test the top of the second floor, if you want to think about it that way. The CACs had been about the strongest one out there in Europe, and it's coming back up to do the same thing. Now the CACs had a range here and here, popped a little bit over it, got pulled back, it's coming back up to test again. We'll see if it can get over it. I don't think any of these are really going to get over it. And the one thing you have to keep noticing everywhere you look is you're setting up multiple swing point lows that in terms of distance from each other, they're very close. And if these markets do begin to sell off, that's going to be something you have to watch. I had a question emailed to me, had to do with a trade that I did, and as one of the members, I did this in the TNT room. For those of you who aren't members, there is a trading room called Teach and Trade, which is TNT. It's a dynamite room. That was the idea. And you know, if you come in here, you know, I'm pretty much in there most days. I'm talking about things I see, trades I see. I happened to talk about the other day a trade that was called that was the IYR. So I want to pull that one up and show you what I was looking at. The question was, why did I do what I did? And so let me walk you through what that trade was and what I did. It was on Thursday that I made the trade. And what I was looking at was multiple things. And you know, the whole reason of making the trade. So first of all, there was an ABCD structure to the downside. And once that had completed, which was right into this price area, we saw a push down and push back up. I thought it was going to end up on lighter volume. Later it looked like it was heavier volume, but the final quotes showed it as lighter volume. So you had a reversal after an ABCD down with a hammer reversal, right, back to the upside. So in other words, you met the projection, and then you get a hammer reversal, which in the candlestick world, you know, is usually a pretty good reversal. Now, what this subscriber saw, and one of the things that he was asking is, okay, this one just broke multiple swing point lows. Shouldn't you get 2 to 3 bars, fast bars to the downside? And yes, that's usually true. And so, you know, you got underneath it here, you got another one, but you didn't get any farther extension. This thing hammer reversaled and flipped back up. At the same time, the general market was still acting strong, right? And if you look at what you were coming into, you know, if you look at this volume here, it was dwarfing these volumes. So there was definitely some concern here from a daily standpoint whether this trade would work or not. So the probability of success was, you know, it was okay. It wasn't great, it was okay. And that is because you finished off an ABCD structure and you got a hammer reversal. That was what attracted me to it. I had been watching it for a while. I alarmed on it, and so then I started looking at it. So then the question was, okay, do you get long or not? Well, here's that chart. I've got it on 10 days, 30 minutes. As a matter of fact, I'm going to pull it in. I'm going to put it on 5 days and put it on like 15 minutes. So the break of the swing point lows was up in this area. So you started breaking, you get fast move down, right? And then this was the reversal part here. Now, I actually went long at, I think it was 27.16. I mentioned it in the trading room, right, and I'll just draw these out, right about here is when I mentioned it as a potentially good trade if it traded back towards the 67 area. That was where I was looking. Why that area? Well, because at the time, and if you pull this in on 5 minutes, you could see this bar, and then this was an undercut, right, on lighter volume and back over. Then you test it again, and you couldn't do it, and then some volume started coming into it. So, and I'm going to pull this in tighter and show you that so you can see what I was looking at. So on this time frame, and I've got it on 15 minutes, you undercut less volume right here. You go under, back over after an extended move down, right? It tries to bounce and can't, comes back, right? Tries to test underneath again, volume's even lighter, and then when it reverses, volume comes in again here, these two bars. So you can see the volume reversal back up, okay? And so as I mentioned, it in the room was right here, and I said, okay, somewhere around 67 would be a great place. Why 67? Well, because that's the bottom of this area here. And actually, let me do that again and show it. So I was looking at, whoops, don't want that, I want this. I was looking at this area right here, and I was telling myself, okay, that's not a bad area. So somewhere towards 67. So when it dipped back down in here, I bought, right? Just held on to it at the end of the day, gaps up the next day, runs up, and then I ended up selling it. I believe the price I sold it at was like 67.88 or something. And if I remember right, it was somewhere in here. I don't know exactly where. Somewhere in that area. Now that didn't turn out to be the low. I mean the highs. And the reason was why did I sell it here? Well, first of all, the reason for taking this trade, probability of success wasn't great, but the reward to risk was. And the reason for that is you didn't have much to risk. If it came back to here, you only had to risk back to this area. So you're risking 30, 40 cents, about 40 cents. So you're not risking much. And you think you're going to get at least a 2 to 1 out of it, probably more. And if if the market had started selling off Friday, I wouldn't have sold it out. But the market starting to sell off Friday is why I sold it out. That answers the other question that was asked. Why did you sell? Well, it wasn't because it in itself showed horrible traits. It's just that the market started getting bad. I know this is just a bounce trade off the potential to come back again, and I want to capture those profits. And so the risk reward was really good, right? There was, it was good. And the probability of success on the hammer and the finish was, 50-50 kind of thing. It wasn't a great one. And that was what led me to do the trade. And I suggested that you could put a decent size on it, and trade the thing off. Now, had I put even more money into it, I probably would have took some out the end of the day right here just to book something and protect myself on a gap open the next day down. But the market looked pretty good on Thursday. It looked as if it would try to trade higher, which is what happened. And of course, this did happen to work out. So that was the trade. Again, we're using the same sorts of things. We're looking at zones. We're just looking at them intraday. We're looking at reversal patterns. We're looking at reward to risk. We're looking at all the things I always talk about and teach, to members when I'm trading and when I'm putting trades out, whether it be in the TNT room or in the portfolio. So that was that trade. That was what it was about. That was what we did and why we did it. So hopefully that gives you a good feel for it. All right. I think that's the main thing this week. This week, I think it's going to be more of the same. I mean, when you look at these markets, I just don't see these markets lending themselves to any kind of breakaway yet. And so if I go back and pull up, let me get the general markets back up. If I go back and I pull up, let's use the S&P because it's the best looking one right now. Where's it going to go? Well, it depends on whether, and I've been talking for a while with members, it depends on whether it can hold this range or not. If it gets in below this range, right, then you start eating into the next one and then potentially into the third one. So the real key this week is, do you hold the higher range? Do you break out of that higher range, or do you break down? So do you just stay in here? Do you push higher, or do you push lower? I mean, it's always that sort of thing, especially when you're in a range trade. The trend is up, the trend's your friend. So you have to think the upside is where it's going to try to break. But folks, if you look inside this thing, there's a lot more damage. We know it's extended. So it's not as if this is where, when you're making trades, or you're thinking about making trades or putting, risk on, you want to put it on where the odds are in your favor the most that you can get, right? And when they're not, you don't. And right now it's not a great time. I mean, this whole year hasn't been a great time. Yeah, you got a big run up here. Yeah, if you bought this bottom and you got that little reversal and you bought it and you held on, well, you look like a king, right? But that was the only trade this year. Everything else has been fake breakouts, right? Reverses. Breakout, reverse, right? And so unless you caught that one move up, or you were shorting on the one move down, this has been a nothing year so far. And you're fortunate if you're just still break even, probably. Sometimes it's that way. All right, folks, I'm going to leave it at that. I see you tomorrow night. Have a great day, a great trading day. Make some money. Take care. Until next time, I'm LA. This is and was your weekly TA Wrap. Have yourself a great night, and I'll see you again. Take care.